All right, today we're going to connect the dots between a huge, hypothetical military crisis unfolding in the Americas and a financial blind spot you might have right now. It's a connection you probably haven't thought of. Let's get right into it.
So, what do you think is the biggest threat to your wealth? A stock market crash, right? Or maybe a recession, inflation. I mean, that's what we're all told to focus on, our portfolio. But what if the real danger, the biggest one, is hiding in plain sight?
Okay, to really get this, let's fast forward a bit. Imagine it's January 3rd, 2026. A global crisis suddenly erupts, and it puts that very question to the test. This is a hypothetical event, sure, but it's a totally plausible one that would send shockwaves through the entire global economy. So, here's how it starts. That morning, January 3rd, 2026, the United States launches a major military operation in Venezuela. And, in a stunning move, they capture President Nicolás Maduro. I mean, this is a massive geopolitical event, the kind we haven't seen in the region for decades. Now, the official story, the stated reasons for this intervention, are things like national security and legal charges. But you know how it is. Analysts, they're looking past the headlines, and they are laser-focused on one thing and one thing only: Venezuela's incredible natural resources. And that right there is the real heart of the matter. Just look at this number, 303 billion barrels. To put that in perspective, that's more than Saudi Arabia. It is by far the largest proven crude oil reserve on the entire planet. Now, yeah, mismanagement and sanctions mean their current output is pretty low, but the potential, it's absolutely enormous. And that is why the whole world suddenly sits up and pays very, very close attention. Right, so a shock this big, it doesn't just stay in one place. No way. It immediately explodes onto the financial markets. And that creates this powerful ripple effect that travels all the way from this global crisis directly to your portfolio. Okay, so what happens first? Well, the most obvious reaction is in the oil markets, right? All this geopolitical uncertainty immediately creates what's called a risk premium. And boom, Brent Crude is projected to spike, testing that $65 per barrel mark. And what happens when risk shoots up like this? Well, where does all the money go? It runs for safety. And what's the classic safe haven? Gold. So you see this massive surge as investors just flee from all the uncertainty, pushing the price of gold towards a staggering $43.80 an ounce. And for us here in India, what does that look like? Well, on the local exchanges, that translates to a projected price of 1,40,000 rupees per 10 grams. That's a huge jump, and it's something that directly hits the wealth of so many households.
So you've got all this drama happening in oil and gold. Your first thought is probably, oh no, the stock market is going to crash, right? But maybe not. Actually, the direct impact on Indian stocks is likely to be pretty limited. Why? Well, for a few reasons. First off, India isn't really that dependent on Venezuelan oil. Second, sanctions were already in place, so it's not like there's some brand new supply chain shock. And third, and this is a big one, the Indian market has this really strong structural foundation now. You know, all that money flowing in from SIPs and local institutions, it acts like a cushion against these foreign shocks. So yeah, your portfolio might get a little shaky, but a full-on collapse from this event, unlikely.
And this right here is the whole point of our conversation. Because while everybody is obsessively staring at oil prices and glued to the stock tickers, they're missing it. They are completely missing the single greatest threat, the real risk that goes way, way beyond all that market noise. Okay, let's break this down. On one side, you have what we all talk about, portfolio risk. You know, you can diversify that, markets go down but they almost always recover, it affects your investments. But then there's the other side, income risk. And that's a whole different beast. It's a single point of failure. If your income stops, it could be for good. And it doesn't just hit your investments, it hits your entire life. See, a global shock like this crisis in Venezuela, it doesn't just rattle markets. It creates this cloud of economic uncertainty that can put jobs and, by extension, your income at risk. Think about it. Your ability to earn an income, that's the absolute bedrock of your financial world. It's the engine that powers everything else. Your investments, your savings, your entire lifestyle. Everything is built on top of it. But what happens if that engine just stops? If your income disappeared tomorrow, what doesn't stop? Well, your EMIs certainly don't stop. Your rent or mortgage is still due. All your family's daily expenses, your kids' school fees, the money you sent to your parents, none of that just goes away. Your health insurance might pay the hospital bill, sure, but who pays for life itself? You know, so many of us, especially salaried folks, fall back on this really dangerous myth. We tell ourselves, oh, I'm covered by my company's insurance. But let's be honest for a second. Is that coverage really enough? Most of the time, it's pretty minimal, and more importantly, it's tied to your job. If you lose the job, poof, the insurance is gone too. It gives you this false and frankly dangerous sense of security. So, what's the right amount of protection? How much do you actually need? Well, the general rule of thumb, the standard recommendation, is a cover that's at least 10 to 15 times your annual income. Why so much? Because that's the kind of amount needed to generate enough replacement income for your family to live on without drastically changing their lifestyle. The hard truth is, most of us aren't even close to that number. So how do you actually protect this thing? Your most valuable financial asset, your income? The answer is pretty simple, and it's the ultimate financial safety net: term insurance. And the concept behind it is beautifully simple. It's not an investment, okay? It's pure, uncut protection. For a pretty low premium, you get a massive amount of life cover. Its one and only job is to step in and replace your income, to make sure your family is financially secure if you're no longer around to provide for them.
Okay, so let's bring this all full circle. Watching the markets, paying attention to what's happening in the world, super important. But a truly strategic financial plan means looking at the whole picture, all the way from these huge global events right down to your own personal foundation.
So, what does a truly strategic plan look like? Step 1, yes, absolutely, monitor the markets. Stay informed about geopolitical risks and how they can impact your portfolio. Step 2, for sure, hedge your investments. Use assets like gold to protect yourself against that short-term craziness caused by events like the one in Venezuela. But step 3, and this is the most critical step, the one everything else is built on, secure your foundation. Protect your income, first and always.
Because in the end, what's really going to matter? 20 years from now, I promise you, your family won't remember the day-to-day blips in the market. They won't care if gold went up or down in 2026. What they will remember is the security, the stability, and the support that you had the foresight to put in place for them. The real blind spot isn't in your stock portfolio. It's in forgetting to protect the very foundation of your entire financial life.